Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 6th day of August 2014, and this is the daily report for gold and silver. Strongly higher pricing across the board in the precious metals markets. Dollar is trading a little bit lower today. Equities markets a little bit higher, but the big news is obviously a major breakout in the precious metals with gold currently trading up anywhere between $15 and $17 higher, $13.0594, call it $13.06. That would be your bid. Your ask, of course, is $1 above that, or $13.07, $13.08. High $13.1060, the low $12.8730. Not to be outdone, silver trading sharply higher, giving back some of the ground it lost, though, yesterday. The thing, of course, we want to make note of is the fact that it has traded to the 61% retracement level and moved off. Currently trading up about 28 cents, 1967 on the low, 2019 on the high. Current print 2003. More on silver towards the end of the show. So traders, we do have the breakout that we have been anticipating, or I should say hoping for. This, of course, was based upon an Elliott wave model in which we saw a superlative rally, a really nice rally coming in. We had an A, a B, it was our belief a C correction that terminated when the market hit and touched upon the 61% retracement level. And it was my belief at that point that we were probably going to re-enter or exit our downtrend that we had been witnessing and re-enter an impulse phase. Of course, what we didn't talk about on a technical basis was a compression triangle. Now, the compression triangle, of course, we've gone through this on many occasions, but we can draw it in the following way. If we take a look at these series of highs just prior to the breakout, and we put in a basic trend line showing our resistance, our upper level resistance, and then look at the bottom, take our lows here, and attach that to our low that we reached at the conclusion of C, of course, basically here and here, and looking at these highs here, we do get a compression triangle. We certainly got a breakout in that compression triangle today. On today's show, what I want to really focus on is different levels of resistance. We started to touch upon that yesterday, but different levels of resistance that we could see occur and basic strategies that we will implement for our current trade. So to look at our interim goals, where we're looking for this market to go short term, we're really going to depend heavily on our Fibonacci retracement. Now, the retracement that I have in is the retracement of this rally, and it has provided us with great insight because, of course, that 61% retracement at 1280 gave us an exact, precise bottom of this market. We entered in. After that, of course, we waited for the breakout, and that's right in here. And now the market is genuinely trending higher. And due to that, we think that our first level has already been really gone to. That's 1305. That is a 38% retracement. Now, of course, we talked about these numbers on the way down. They're not really going to change on the way up. As you can see, market's currently trading 1305.30, so just below that. The level above that, we do have something at 1311. Then we get 1320. That is our 23% retracement level. And we want to see it, obviously, take out this high of 1345. Now, one way that we can look at this market is just to look at the possibility, look at the length and the range that we saw in this first rally. And the rally was roughly $100. In a way, we can look at it in the easiest way. We can, of course, do a Fibonacci extension, but much easier than that is to simply take a scalable line, which is what this is. It will scale as I move it, and move it to the bottom or the low of C, and that should give us a pretty eloquent projection of where we would look for this market to go. And based upon that, I think that 1380 is absolutely an achievable number. We've got this one high here. This, of course, is 1391, and we do have to take that out. But I think that prior to taking that out, we will probably see this is wave one. This is all within wave three, by the way. This is a subcount of three, but here's wave one. Here's wave 2. Wave 3 cannot be the shortest of any of the impulse waves, so I'm simply making it even. Then we would probably get some sort of a correction again. We would plot that at a later point. And then our final 5th wave up, and 5 typically equals 1. So we probably will get a $100 rally here, some sort of a retracement here. And this move, I believe, could take this market up as high, as I said, as 1380. Now, it's like Russian dolls, traders. Nothing tends to go straight up or straight down. So within this particular move up, meaning our current rally, there's going to be a subcount within that. And so we'll probably see something like 1, 2, 3, 4, and 5 equaling our 1. That equaling 3 of 3, and then an outer 3 on top of that. Not trying to be confusing, but let you know that there's a fractal nature involved in the Elliott wave count itself, and you can always subdivide the components to smaller and smaller degrees and larger moves in the market, whether you're looking at the intermediate, the major count, and any of your sub-counts, your minor counts there. But in terms of a big picture, which is what is really important right now, I would be looking for the market to, over time through August, maybe into September. I think that that's pretty valid because we're using the length also as well as the angle of wave 1. So over the next, say, 4 to 6 weeks, see this market move in some sort of a zigzag pattern and meander up to about 1380 per ounce. So traders, what about silver? We're still flat silver, but for the first time since we entered our gold trade, I'm actually seeing some light at the end of the tunnel. The fact that it now has come to a 61% retracement tells me we've probably seen the lows from this most recent rally. Market retraces just as we saw gold retrace 61%. The candlestick pattern that we're seeing right in here is a piercing line. It is a genuine and strong piercing line. Of course, the definition of that candlestick pattern is to open below or at, and then trade to or above the midpoint of the prior candle. Secondly, a third thing that I like is the fact that it looks as though we are closed over $20 per ounce. We know that we've closed over that in New York, but I'm talking about just prior to the break in the continuous contract or spot market, which does have a break each day, and that break has begun. So we have, in fact, closed over $20, or we're just getting into the break itself. So if we got on the following day, meaning tomorrow, traders, if you see a confirmation, and a confirmation of a piercing line is simply going to be a green candle with a higher high and a higher low, something like this. If we get that confirming candle tomorrow, we can go ahead and trigger a buy signal in silver. I am being a little bit cautious about it, but I needed to see if the market was going to test 61. That is why we have remained flat and out of silver. And during that time, we saw it meander down because when we entered the gold trade, realized silver was trading up in this area. It had not at that point even touched the 50%. So I feel as though if we do see this confirming candle tomorrow, for those that do trade silver, it will probably be safe to enter the water. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.